Okay, hi everybody. Today is the 5/22. It's a very nice day. We had a nice action from Bitcoin. We reached all-time high in the last few days, and we are here to see what is going on, with the market.
Everyone.
So, yeah, I am here with Marcos and Costa from the Minotaur system that are close collaborators. We develop bots that work with power law principles. We are going to discuss these bots later at the end of the show. So let's start, um, and I will show you these two charts. The first one I want to show this chart that is so this chart shows where we are with the price right here, and it compares it with global liquidity. So this is actually not global liquidity per se. It's actually a model of global liquidity. So it takes global liquidity, and if you look at the last 10 years, you can approximate the behavior with a power law. It's basically the Bitcoin price equal global liquidity to 9.2. So a small change in global liquidity because of this big, huge power gives you a big change in price. Um, you have to include a delay because supposedly there is a delay. So we don't know why there is this delay. There are many interpretations. One possible interpretation is that you get all this money flooding the market, and it takes some time to reach Bitcoin because it's considered still now it's considered a relatively risky asset. I don't know why they consider it in that way. I think it's the most safe asset there is, but most of the market is still thinking that. So it takes time for the money to reach Bitcoin. Maybe it's not something written in stone. It's possible this delay in time becomes smaller, so it's something to monitor. But right now, 85 days works fine. And you see two curves here. One is green, that is a kind of a smoother version of a model, and then the purple line. The purple line is basically using the power law that we observe between the price and global liquidity. So instead of plotting global liquidity directly, I make a prediction based on global liquidity above a price, and then convert it into a price, Bitcoin price, basically. Um, and so remember, it's about 85 days, so 90 days delay. So it gives us kind of a preview. I will not take it kind of one-to-one. It's possible that we don't follow every twist and turns of this curve, but the general direction tell us where we are going. So there is a lot of liquidity. We need that liquidity. For months, I complained, when we were here, we didn't have enough liquidity. Now we have it, and 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 Bitcoin price is responding to that. We are going that direction. If we take at face value this prediction, in the next 3 months, we are going all the way to about 133,000. And this graph below shows the winning rate of both Bitcoin, that is blue here. And you can see this is ahead of time because, again, you can use these. It's pretty amazing if this holds true in general because it gives us kind of a 3 months preview of where we are going. Again, don't take it uh, like if it was written in stone. It's more like an indication than a one-to-one thing. But I calculate it usually when global liquidity goes up, 70% of the time the price of Bitcoin follows. It's a little bit less when we have a correction close to 60%. But it's a pretty good indicator. The other indicator I want to show you is this one, that is a cycle comparison. So let me explain this a little bit more complicated. Let's see if I can explain you this one in a couple of minutes. What I'm doing here, I'm using the power law. The white line is the central power law, the reference point. This one at the bottom is a support. The pink is what I call the full model. So the full model tries to combine both the general direction of a power law, but also the cyclic nature of the cycles, right? This periodicity of the cycles. The idea is that I'm using this terminology of a time. 9 is when the bull run starts. 12 is the top of the cycle. 3 is the bottom. And so right now, this is where we are. Basically, this is a new cycle starting. This is the equivalent of 9 time 9 in the clock. 12 will be the next top. It is here. I use the end of the year as a point of reference. So the top could be anything within a couple of months. Usually it happens before the end of the year. So it could be a couple of months before the end of the year. Anything between, let's say, October to December. The projection is 200,000. That is based on previous behavior, basically on the decay of the top. You can extrapolate it, and we had very large deviation in the past, up to 10 times, like in the first cycles. The next deviation is more like 80%. So the power law itself, if you extrapolate at the end of the year, is going to be 130. If you add to that 80%, we get to 200. And here is what the other cycles look like in the past. So every time you go down by 1, right? So this yellow curve, it's exactly basically is so instead of, some people superimpose them. This is another way of showing them, because this shows the correct price of that particular time. So basically, it's almost like you're going back in time by 4 years and then 8 years, and you can see what exactly happened during these times in the previous cycles. And the previous cycle, we had this strange behavior where basically, see here, it's kind of like it repeats itself, right? So you can see also what happened here, right? This guy is this guy. We had a double top, right? But Bitcoin still had a top where it was supposed to be here. Still decided that, look, I have an early top, but I'm going to have a real top at where every other top happens. So it is basically Q4 of this year where we have a bull run. And so it looks like this, like now, because at this time of a cycle, last time we already reached the first top. We had a strong correction, and then we go back and have a top. So we are kind of more similar, or maybe a mixture of this cycle and this cycle. The cycle 8 years ago was almost like a textbook example of this very organized behavior. The price follow the power law. Bottom, the support for quite a bit of time, basically 2 years is how it goes, right? It goes 1 year up, 1 year down, 2-year power law. It's overall still a power law, because notice what happened. When we go up, it gets canceled by when we go down. So the total result is the power law. This is why we have a power law as the main pattern, because the bubble kind of cancel. But here we have 2 years straight along with power law. We didn't do this. We did it initially. Then we deviated because of I think the reason was the ETFs. There was a lot of cash injection, FOMO. The price was pushed up. Reached the power law, didn't like it, correction, but we didn't reach the support, right? So we still got a bull behavior when November came. That is, I draw here the beginning of a bull, but really, usually it's like a month before, like November. And I announce it. I say, prepare for the bull. And we actually had the bull. Then, because of lack of liquidity, tariffs, etc., we got a very strong correction. And notice what happened. We're back there. We're back to this pink line that is supposed to be the full model. So it's almost like all this didn't matter. It's almost like if we follow the bottom and then we continue go up, we're there. After all this, now we're back. So all the people that claim that the cycles were dead and that it's over, we don't have cycles anymore, well, we're following this. So we are perfectly on the path of repeating what we had before. Maybe we continue to follow this line, we reach 200K, and then the next question, the next big deal will be, do we see a correction, right? And we will see. We will see. I think these cycles don't have the strength and the value, predictive value of a power law. There is kind of a hierarchy. Today I was discussing this, and they say if a power law is 10, the cycle predictability maybe is close to 5. It doesn't have the same predictive power. But so far, it seems that even this periodic nature of the cycle is kept in, is still valid. And it was premature to dismiss it. We are going to see if it continues, right? If we really reach a top here, and then if we have a strong correction. Some people are already saying, "Oh, we are not going to see a strong correction," blah blah blah. And I don't care about words. I care about what the data say. When the data, when we arrive here and the data tell us we don't have a cycle anymore, uh, we will, we will take in consideration that. Right now, I take seriously Bitcoin past behavior, and that will mean we will have a correction. If we have a correction, then we go all the way to 75 after 1 year. But let's take one thing at a time. Let's see if we can go first to 100K. All right, so this is kind of my analysis um, for um, for what concerns the power law, and we'll switch to Marcus.
Okay, let me load up. All right, let's see what the liquidity has to say, the local liquidity. Um, okay, really quick, what we're looking at here is a trading view, typical price action chart on the daily time frame. We're looking at the Bybit futures exchange. This is a leverage exchange. We like to look at derivatives because leverage is where price discovery typically happens first, and the spot markets follow the leverage markets. It makes sense because that's where the high concentrations of borrowed money is at. It's going to be speculation and all that happens here first. So we use Bybit. All the exchanges are very similar. They're not very far apart because the arbitrage um, activity will keep them in parity. Okay, so this is your typical trading chart. As you can see, we have been going pretty um, parabolic here, and this line is this trend line is on the power law. It's just amazing how when we deviated away from the power law, we got back quickly and we're running right on the bottom of that power law schedule. So that's pretty interesting how that occurred. All right, so what we're looking at here on the daily is this new action here. So let's just see. Let's start layering into liquidity really quick for those that are new. Um, there's two things: chicken egg liquidity and price action. Price action generates liquidity, and liquidity attracts price. So they are one and the same. Without price action, you can't generate liquidity, and without liquidity, you can't have price action. So all of these big moves are the result of some liquidity being liquidated. So now we'll add in the liquidity to start layering it in. I'd like to start off with the 25x today um, because it gives us a very interesting comparison. It gives very uniform levels. These are 25 x leverage positions that are already locked into the market. And by that, they're either in drawdown or they're in positive P&Ls. So they're not going anywhere. And if you noticed, we had levels from where this started. We had three levels of 25x, and they've been liquidated. Each level has been liquidated. Last week, we only made it, we were here in this area here, and we were trying to determine where we're going to come down or we're going to correct or continue up. Well, the probabilities say that the liquidity was going to be taken. So that's the last of the 25x at the top of the, this is the all-time highs up here. So we took that level, and now where do we go now? And we're still maintaining this trend line, right? We're still on that trend line. So now let's add in the 10x leverage. So when we add in the 10x leverage, we get a little bit more composition, a little bit broader picture here. And then I'm going to layer in the 5. This is the 5x leverage, people that have 5 times. And then last, we'll add in the 3 to get the full picture. 3x is almost like spot. It's only 3 times. And you can get a good picture that we're still hanging in. We got some new additions to leverage here, and we're coming in at that 140 level. Um, Typically, what can be expected is we had a nice amount of what I call what's called internal liquidity right here on the these are shorts up here and these are longs down here. So this internal liquidity was formed when we had to move down, and all of these positions came into play on that move down, and now that's the first to be taken out on the reverse. So we've taken out all of the internal, and we're sitting right here, and this is what we call level. This is level liquidity because it's on a key level and it hasn't been tapped, right? It hasn't been liquidated. So we're right at that key level. Typically, we take out internal liquidity like here, you take out internal liquidity, then you reverse. But in this case, what may be changing that is we have a tremendous amount of liquidity that's just built up right here above price. And liquidity acts like a magnet for price. So let me zoom in a little bit. So it looks like the price is going to and terminate this liquidity here before we correct. That's what the probability is looking like now. And that pool is sitting at about 115, 17K. So we may have more upside to go in the near term because it looks like the price is going right for that. And that's determined by thousands of algorithms all simultaneously running. That's what creates all of this price action. The algorithms are working in not on the not they're not they're not in the same company, or they're not manipulating it together, but they do it collectively. They all run in similar programs. They all have similar objectives. It's kind of like an ecosystem. If this was the ocean, you have different types of sharks, different species, but they typically do the same things. They may do it a little bit differently. So all of these algorithms are pushing this price in this type of format here. And this type of price action generates the liquidity. So if you don't have this choppy action like this, then you don't have the liquidity built up. And that's required. And just to give you a little bit of background here, when price does two things, so we'll just go back to the 2024s, it builds up liquidity above and below. These are the longs, these are the shorts. It builds up that liquidity. And then that's when it breaks out, when it harvests or liquidates that liquidity, when it takes it back. And that's what creates the big moves. So we had a big move when we liquidated a tremendous amount of liquidity in 2024, around the end of 2024. And that put us in this new range that we've been in for about 5 months now. And what happens is when it gets into a new, that's what price discovery is all about. When it gets into a new range, like here, it starts off with no liquidity. That's why the price stops. There's nothing here. It stops and it consolidates again. And as you can see, once it starts that consolidating action, then we get new liquidity starts to build up. Oh, right here, like this, starts to build up. And then over time, the price continues to consolidate and that liquidity gets bigger. And then the price action starts to harvest that liquidity. So it's a pretty simple mechanism. It's what's funny is the markets are extremely simple. They're not overly complicated. What happens is it preys on our impatience and our narrow sightedness. That's what it preys on. So as liquidity begins to build up, then the collective algorithms and market makers, they start harvesting that liquidity, as you can see here. And then when they harvest it, so these are long. So when they are liquidated, they are forced to sell. So they are selling low. And then once they get enough inventory from liquidating the liquidity, they go back start harvesting the short side, this side, and the shorts are forced to buy. So these are selling low and buying high. That's the opposite of what you're told to do. You're supposed to buy low and sell high. Well, the market makers and the collective algorithms has these locked in traders selling low and buying back high. So if you can see, it's a simple game. They get their inventory, they push it up here, and they sell it off up there over time. It's a very simple strategy. And what's happening in here is it's kind of like a betting game here, a casino. All these traders are making bets in here in this chop, and they're getting added into this liquidity above and below. Half the people are saying short, half the people are saying long, and it just continues to build up. And this action is so good, it tempts you because you're looking at it. If you're a bear, it can look bearish, and if you're a bull, it can look bullish. It preys on your bias, and no matter what your bias is, the market will make it look like that, and then you get added into these pools, and then you get liquidated. So right here is a heavy concentration of shorts that have been building up on this price action over time. Here is building those shorts, and the market appears to be going, at least for this intermediate area right here, which typically it doesn't do right away, but it's so close to the key level that they're just going to probably take that, and then we may get a pullback. And I don't expect it to be a very big one, but we have gone up from the low here over 40%. So we are due for something. Actually, we're all bulls here. We're all very bullish, but it would be very uh, healthy to get a 10% correction so we can have more health on the uptrend as we continue to liquidate here. We'll continue to take out this pool here, and it would just be very healthy to have a little pullback before we continue higher. Because if we continue on this, the longer we, sorry about all the jumping around, but the longer we stay on this trend line here, and we just keep going up, the deeper the correction. So I don't I don't want a deep correction. So it'd be better to get that little correction over now so we can stay on schedule, stay on the power law.
What is a correction that you see from the chart?
Well, this would be my corrective targets. We've already taken out all the internal liquidity, right? We have level liquidity up here that we haven't tapped yet. So the internal, usually when you take out the internal, that's when you get it, right? So we've done that. So that puts the pullback in play right now. So let me show you the levels. I'll just back off some of the back down to the 25. The 25 is very good at showing you the key levels, right? So as we were going up and terminating these levels, and that's why liquidity is such a market making, and the algorithms, they're very efficient, right? So as they were terminating the shorts, they were simultaneously building the long side liquidity so they can come back. It's a two-way action, right? So what I'm looking at here is when we pull back, this liquidity pool will continue to go this way, and this one will continue over. So this one is a high probability of being taken. So the bottom of that pool is 100K. So in a bull market, we're in a bull run right now. We're in a very bullish uptrend right now. So pullbacks are typically very short. So that would be your perfect bounce point. Liquidate this first level and then continue on. I The probabilities are much lower to get to these lower levels right now. We'll probably take them out in the bear market phase, which is after 200 or 180. So right now, to answer your question, Geo, um, I'm looking at this pool right here any time now. So that's in play back to 100. That would be very healthy, and then we keep going.
Good to know.
Yep.
Yeah. And I like the fact that yeah, we start to see some, you know, that the next big red, it's
Yeah.
around one, it's a year, and then if we break through, we go all the way to
Yeah.
uh,
There's a
125. Yeah.
there's a huge amount of it right there. And what's happening right now is this price action is actually being fueled by shorts being liquidated. because when they're
Mm-hmm.
liquidated, they have to buy. So that's actually
Right.
just sucking like a vacuum. It's just sucking that price up right now because
Yeah.
there's not like a lot of open interest is actually going down, but it's this liquidation that's driving the price right now.
Mm-hmm.
Yep.
Yeah. And once
All
you're
right.
done with that, then you don't have a lot of fuel,
You don't have a lot of
unless,
fuel
yeah, we need
because
to go.
there are a lot of institutions hanging out right down here.
Yeah.
There's a lot of institutional demand here at this liquidation level here.
Yeah.
So the big players are looking to buy back in right here.
Yeah. Yeah.
They're not chasing this. They're looking to get
But
back
I
in.
do like the idea that we are above the 100,000, psychological level,
Yep, right
because
here.
that means that we don't really need to go too much lower than that, right?
No.
That we could stay above that and still get plenty of liquidity.
And there's a lot of demand here at this 100K level. There's institutions
Yeah.
waiting on this correction so they can continue to push it up.
Yeah.
Yep.
What's interesting is that when Saylor does his post and everyone's like, why didn't that move the price? You can see what's actually moving the price is a buildup of months and months and months of orders that
Months.
are then
Yep.
executed simultaneously. Bang! That's what's
Yep.
driving the price. That no
Price going
single
higher
move
up.
is doing it. It's actually it's kind of it's deterministic in a way, right? But it's
Yep.
deterministic uh, over only the last sort of 3-4 months. Is that liquidity builds up on either side? It's gonna go one way or the other.
Yep.
Um, it's really interesting to see what's moving it, but
I mean, people just need to watch our previous episodes because it's we predicted it. We're there
yeah,
telling these
no,
things
we
like,
did.
It's
go and look at the previous episode. I mean, Marcos was
uh,
telling us exactly what
what was
was
going to
going to
happen.
happen,
Yeah. Because
and it did happen.
the
Because once you read this information, it's pretty clear.
mhm.
I mean, nothing is 100%. But it gives you really an edge. It gives you. It's a map. It's a map of
Yeah,
eternity.
And you can see what the algorithms are doing. It's not one algorithm, there's tens of thousands of them. This is an
Hmm.
ecosystem like an ocean, and they're predators and they're prey. If you're on the wrong side of this, you're shrimp, you're barnacles, you're small fish, and you're getting eaten by barracudas, mako sharks, great white sharks, killer
yeah,
whales. Everything's in there and they do their thing, but it makes the ecosystem work. And it's very clear that there are algorithms that are harvesting these positions. Super
Yeah.
clear. It's moving right now as we speak. Like look right now, it's actually being sucked into that liquidity right
Right.
now as we speak
Yeah. No
right there.
shorts.
Yeah.
No shorts.
and that comes to the I guess the logic that we're implementing in our own trading strategies for Minotaur and that we're all using personally is a combination of Marcus's understanding of how the markets work and how they're driven by liquidity. This is how Marcus helped us develop the algorithm to where it is today. And then we're using Giovanni's kind of macro framework
Yeah.
to trade within those ideas that Marcus has helped us determine. And then, well, really, that's the reason why the algorithm is able to get such good returns because it's based on, like Giovanni said, like we predicted it because this is how we believe the markets function. And then we create an
Mhm.
algorithm that exploits the very
Right. That.
ideas that we have that are working.
Right. In a world driven by algorithmic trading, there's tens of thousands of algorithms. Then it only makes sense. It's intelligent for you to have your own algorithms to
Correct.
compete against those algorithms. So it's all driven by algorithms,
Yeah.
99.9%. Yeah.
And we can have a
So
look at just to compare today. Like, let's look at this price action.
I'll
If you let me share my screen,
stop
if
sharing. Yeah. All right.
and let's just have a look at the most recent performance of the algo just over the last 7 days, and you'll see. Giovanni, you'll need to maybe Marcus. You'll be able to talk through this. I think it's
Yeah.
a
Yeah. Yeah.
good
Yeah.
example
Let me do that.
because you can show how
Uh,
the algorithm now is on the 15-minute taking advantage of these
yeah.
moves.
Yeah.
Here we go.
Yeah, there it is. Just constantly working. Um,
Yeah,
one of the benefits of the algorithm is it doesn't sleep, it doesn't eat, it doesn't have emotions, it doesn't get tired, it's not bullish, it's not bearish, it's always on, always waiting, and it's taking the positions that are accordingly to its programming. It doesn't miss, and that's the
it's
magic. It's
beautiful.
very
Look at these
very
beautiful
simple. Yep,
entries.
very beautiful
Look at
entries.
that.
Yep.
And these
Yeah,
take profits. Look at these take profits here.
yeah, that's what it
Fantastic.
does. It's in rhythm with the other
And I
algorithm.
want to add, because today I was watching, there are a couple of people that I follow online, because I think they are good, they have talent. But
Hmm.
they take enormous risk. Like, I will not make any name, but I saw somebody was he opened. He had a good intuition. He understood that we had this run up leg, for whatever reason, the global liquidity, etc. And he opened, like, I think from what I understood, it looks like a 20-30 per or even more leverage trade. I mean, he made a ton of money,
Hmm.
but he could lose it all.
Yeah.
And he has a big following, etc. I mean, I don't say anything negative. He's a good trader, but it's a different type of approach where we are not exposing ourselves to these crazy risks, and still we are getting over a long time a pretty good return. That is one of the things I want to emphasize. We focus, because I have a friend, Dario. He's like a degenerate, and he's calling me, can we push it, to make 2 times more, 4 times more? Yeah, you
Yeah, you
could,
can
but
for a
then,
You can,
while, a
you
little
can,
while.
you
yeah,
for
yeah,
till the wheels come off. Look,
right.
this
And
is what's interesting is that, do you want an institution grade trading system, or do you want to open up a 30x leverage position
yeah,
and roll the dice? You might as well go to the casino. Like, it's fine. People make money doing it, but that's the thing about cryptos. Everyone sees that. What
right.
we can provide you with is an institutional grade trading style that's completely algorithmic and 100% hands off. The average person cannot beat this system. I would even argue that 1% of all traders probably can't beat
I
this
can't beat
system.
it. I can't beat it. I try.
Yeah.
Can't beat it.
Without, I mean, you can beat it by luck,
Well, maybe by luck,
temporarily,
and yeah,
but temporarily, and
One trade out of 25, I can beat it on
yeah,
yeah,
one,
yeah, yeah.
but not over
And then
time.
and
No,
then you can
absolutely.
risk to lose it all.
yeah.
And so that is what we try to focus on, to
And
preserve your
just
capital and get an edge anyway.
And yeah, and this is why Citadel is managing billions and trillions of
yeah,
dollars, and degens are making trades on Twitter, because you can't trust discretionary style trading
you
or
can't.
just TA in this environment. It's
Doesn't
too
work.
sophisticated, and it's
Right.
moving in a way that most humans can't wrap their brain around.
You can't.
So, correct. So, this is the edge that you can get. And I think we've got probably the best product out there that takes advantage of not only the volatility and the behavior of the market that Marcus explains, but we're able to incorporate the ideas of Giovanni. And I think that's very, very unique.
Right. And just to
and,
add
gi-
to what
and
you're saying,
give,
Costa, um, one of the things you have to understand is if you're a discretionary trader, you are a caveman, you are a dinosaur, you're on your way to extinction. Um, because you have to understand that algorithms are creating this volatility. The thing that I showed on the daily chart is happening at the 1 minute, the five
Yeah.
second, the 5 minute. The algorithms are pushing the price all over the place like this because they're creating liquidity and harvesting liquidity at all time frames. Matter of fact, on the macro scale, time frames is even greater volumes. And if you're trying to do that with a discretionary, because a discretionary trader, they make a position with a stop loss and a take profit. You're kind of like playing in a casino where you pick the number on roulette and hope your number gets hit. That's not going to work. You need a system to where it doesn't matter what the market's doing. You have the equipment, the bandwidth, the structure, and the amount of margin to be able to cover all angles. That's what these algorithms do. And if you're doing that, you're not going to last very long. The casino is going to beat you, basically.
one of the things that really surprised me about the algo is how well it finds these local bottoms and tops.
Yeah.
It's really incredible.
It's trading in rhythm with the other algorithms.
Yeah.
There's an algorithmic warfare going on with tens of thousands of algorithms firing orders, and this algorithm knows how to trade in harmony in that environment.
Hmm.
Sometimes it gets front run by quicker algorithms, but that's
Sure.
okay because our algorithm, it doesn't eat, it doesn't sleep, it just patiently waits until its target is hit, and it hits it every time. So yeah.
It's amazing.
It is. It is.
Costa, we are going to have, we all going to the conference. So if you want to meet us, we will be there. I will be there. I will mostly hang out around their Minotaur booth. We are going to have a booth over there, so you can find. But I let Costa explain, because Costa can tell us.
Yeah, we've got the whole team coming to Vegas. Myself, Sebastian, the CTO, Marcus. We're also getting some of our specialist team that basically do all the conversations. You know, when you book a call, we've got Matt and Josh that take those calls with our prospective clients, and everyone's going to be there. We want to basically answer your questions, do demos, and meet you in person. You know, a lot of the products out there, you know, you never see the face. Half the reason why you can't trust a lot of things is because you never meet the person behind it. There's no transparency. One of the things that we do, which Giovanni does, is that, you know, we put ourselves out there, number one, but second, like, we put our money where our mouth is. Like,
Yeah.
we're running our own money on these algorithms. You know, Giovanni has, I know that you've been watching his X post, but he's said, I just put my friend on this. He's got 1 Bitcoin. So
Yeah.
we're sharing it with our friends, with our family. We're also giving anyone the opportunity, if they qualify and they're a good fit, to join and run these algos as well. So yeah, feel free to.
And by the way, it should always be a small portion of your holdings, okay? Because there are risks associated with trading in general.
Absolutely, yeah.
And also, unfortunately, until we have a fully decentralized exchanges, that is part of the risk, you know, because unfortunately, we have to use these exchanges that are using futures, because this is what we trade, right? We trade futures. We don't touch the Bitcoin as they sit on your exchange. We use them as a collateral. Then via API, we bought those we traded. We never touch your money, of course.
No.
But it's still a risk, right? Because it's sitting on an exchange. So, you know, do a calculated risk where it's still a small portion. It's a little bit more aggressive portion of your portfolio, where you take it a little bit of risk to have more Bitcoin over time. Most of your Bitcoin, the recommendation to keep it on a cold wallet, it's valid, right? We all do that ourselves. It's just that we have a slightly different, let's say, philosophy from others, let's say hodl, and nothing else, maybe DCA. This is a clever way of doing DCA, you know, with a small portion of your holdings. So that is how I'm doing it, you know. We are not giving advice, we are just providing tools that people can use. But yeah, so you were saying, Costa, we are going to have this event, right?
So we've got this event, so we're going to be there every day, and we're also hosting Giovanni for a private event. So one of the reasons is well, they didn't invite him this year to speak, which we thought was a real shame, and we thought that we should give him the opportunity to present his theories to the public. So yeah, you know, Minotaur's put together a private event in the Zeno Ballroom on the 29th of May. The doors will open at 4 p.m. Because it's a private event by Minotaur, it is going to be invitation only, and there's also going to be free food and drinks provided. You know, just some snacks to keep people going and some drinks as well, just to give it a
what about the dancing girls?
Cocktail party enviroment.
No dancing girls.
No dancing girls. No dancing girls. Plenty of pasta.
The showgirls coming.
So just pop past the booth if you want to come, and we'll give you one of these invitations, because Matt is one of our specialists. He's about 7-foot giant, and he'll be making sure that no one sneaks in without one. So yeah, come get an invitation, come meet us, and yeah, we think this is going to be a really great event. I actually think I think we're going to get big numbers here. I really do. I think that once people understand that you're going to be speaking, and it's going to be intimate, and there's going to be lots of opportunity for Q&As and even meeting you in person, I think that we're going to draw a big crowd. So I'm really excited about that. So let's make sure that anyone who wants to come, just pop past the booth and ask for an invitation. We'll have a really big display of everything as well, so you can get the
and you also can DM me. We have a few more invitations. You know, can DM me and I will give you an invitation. Or if you're really motivated, come to the booth and we will give you an invitation there. So
yeah.
Yeah,
Absolutely. There's a good question actually that's just come up. Maybe
sure.
Marcus and I can
Let's
tackle.
focus on the questions. Let me highlight them.
So I'll explain this first, and then Marcus I think can chime in because I think it's a joint question. So what there's really two elements to what we do. The algorithm itself that we create, it's a bit of a Swiss Army knife, right? So it allows you to pretty much control all the inputs. They're all variable, which essentially means that you can create your own levers based on, in other words, you don't need to use the parameters that we set. You can go beyond them. You can turn, a very, very safe vehicle into a sports car, and that's what Marcus does. So, out of the box, what we give you is our settings that are long only, right? And these long only settings have been simulated in lots of environments, including Monte Carlos and also the real price action over about a 6-year period. And those settings were able to survive both bull markets and crashes while staying long only. This makes that algorithm very, very, very safe with liquidation levels far below power law support without having to add any cash reserves. That's why this is so safe. But if you're going to you have to pay a price, and the price that you pay when you set something up that's so safe is a little bit of performance, right? So those out of the box settings have a particular performance target. We usually say we can still generate around 3 to 5% per month. Again, that's a little bit lumpy, but on an average over that 5-6 year period, that's what it came back to. And we'll keep you basically safe the whole time, and we can stay long only. Now, we understand a lot of people want to turn, call it a Mercedes, call it a Rolls Royce into a Ferrari or a Lamborghini, and that's where Marcus comes in. And he's in charge of our trading desk. And what we've done is we've put on a lot of bells and whistles to the algorithm where we allow it to short, we allow it to do lots of other things, and Marcus can maybe cover what sort of performance he targets based on making these dynamic adjustments, which allow us to do a lot more with the algorithm itself. But it is more advanced. So again, it's not for everyone. Giovanni always makes this point: is that maybe hodling is for you, maybe the safe version of the algorithm is for you, maybe the trading desk is for you. So you don't have to do everything. You just got to do what suits you and what is best suited to you as well. Everyone's different.
Right.
Well said. Well said.
Now, we do explore all the time new ideas and new approaches. So I will not be completely against shorting. Maybe
Well, Marcus can talk about how he's doing it in the trading desk as well. Yeah.
Yeah, the algorithm is institutional grade. It can do whatever we need to structure it to do. It can short, it can go long, it can trade long time frames, big ranges, or it can trade in a short time frame environment with very tight ranges. So it's fundamentally sound. So as Costa was saying, in a very general sense, you can just stay long and let the power of Bitcoin with the power law power your wealth and your assets, and you can sleep at night and it's very comfortable. But for those individuals that have more time, more resources, and they want to take it to a higher level, you can operate in a very high frequency environment with both long and short simultaneously. You can attack smaller time frames. Just remember, the shorter the time frame, the more sophisticated and the more experience you're going to have to have. Um, all of the major institutions, the Citadels, the Black Rocks, they have tens of thousands of algorithms, and they have computer farms and server towers, and they're running in nanoseconds. So just keep that in mind. Costa is telling you from a general standpoint, you can do quite well. I mean, 3%, 5% a month beats the brakes off the S&P 500. I mean, so who wouldn't want that with low risk, sleep at night, don't have to do much. But there are people that want to increase their returns, and they don't mind operating at a little bit more higher level. And that's what we do at a trading desk. Is you can take the Ferrari and go take your mom out to get groceries in it, or you can take it on a racetrack. It'll do both
Yeah, that's
things, but it's probably
right.
it's probably more suited for the track. But it's up to you. Yeah.
Awesome.
Dario has this Aston Martin car,
Oh well, even
and
well, there you go.
it's a beautiful car. Like
It's a
he
beautiful
brought,
car.
he was so happy about the result of the algo And they say, Giovanni, I need to treat you. I need to treat you. I don't know if you saw this picture. Did you see this picture with me
No.
and
No.
this huge tray of sushi, like an enormous tray of sushi? So we went to this place, and he bought me all this sushi. It was amazing. We were in LA because every time I go there, he treats me to this spectacular dinner with Italian food because he's a restaurant owner. But I say, look, can we get some sushi this time? And he treated me. So you
Oh,
deserve
nice.
all the sushi of the world with all the results. What did we do with him? Like we started in February, right? And
He's doing
he was
pretty
like
good already. Yeah.
I think
one Bitcoin
40,
collateral,
40%,
right?
40%, 15%,
Yeah, he's
16%.
He had one
he's double
Bitcoin
digits.
collateral,
Mhm.
and that account right now he put more money, but he started with one Bitcoin account, and then actually we lost a month because there was some technical error that didn't have anything to do with the
Yeah.
bot, and even with that last month, we did. His account right now is almost $19,000, on one Bitcoin from February. So, and I mentioned this because that is the same thing that happened to me. This is why I am here. I didn't join until I had evidence that was consistent behavior, that the algo was doing the right thing, my capital was not exposed. Right now, just to give you an example, I will have to go all the way to what 20,000 Bitcoin
Yeah.
to
To
be
be at
liquidated.
risk, yeah. To be at risk.
Yeah, but that's important to understand as well, that the liquidation level is just the point of defense, right?
Right.
Because we're not creating a 30x leveraged position that's isolated. This is a cross margin unified position that we understand the risk level when we build and engineer the bot. So our eye is always on the liquidation level, not at the moment it trades, but on the moment of setup, which could be months before.
Yeah.
So we know at any given moment where we have to start defending. Now, there's millions of ways that you can defend a position, from hedging, from options, from adding stablecoin reserves. So what that means is that just because there is a liquidation level doesn't mean you will get liquidated, right? Because if Bitcoin drops to 20K, chances are you're going to buy more Bitcoin. You can add it to that position. And suddenly your liquidation level now is 5K, right? Because you just bought 3 Bitcoins for 60 grand. So the liquidation level is very, very different from an isolated position. What we do, it's more, we have a holistic trading system, and the risk is defined in a different. It's a point of reference. Correct.
Reference. Yeah.
It takes a long time for people to get their heads around how it actually works, but within our system, we train you and educate you. And this is another reason why people sort of, that they ask, why do you have to do this? Why do you have to do that with the system? Why do you have to get it? Like some people go, why do we have to get on a phone call for 1 hour to join the bot? Well, it's just not a bot, right? It's actually a system. We have to educate you. We have to train you. You have to learn how it all works.
Yeah.
And if you're not a person who's a good fit, we can't really help you because you're not going to be able to go through the training that we need to do, because we have an obligation to make sure that you're educated, that you're being safe, and that your money's safe as well. That's the other thing. It's a very big part of the company, and Giovanni understands this, and that's one of the reasons why he's so happy sharing what we do with his community. It's because we're not doing anything crazy, and we're not putting your funds at risk in any given moment, right? You understand fully and holistically what the risk levels are when you engineer the bot. And that's a massive, that's correct. And that's a massive thing. And I think maybe, Giovanni, I don't want to put words in your mouth, but I think that's one of the reasons why you trust us.
No. And I was thinking about this, right? I don't want this to become like an ad. We are doing an ad, but at the same time, it's not a commercial. We're really sharing our understanding of Bitcoin. I consider this a valuable understanding of Bitcoin, because to me, the beauty of Bitcoin right now, and it has always been like that. But if you bought 1,000 Bitcoin when it was $1, right now, I mean, you could still play and have fun and invest, etc. But you're set up, right, for life. You don't need anything else. But most of us, I don't want to discuss my personal situation when I joined quite early, so I say most of us in general, but most people do not have that level of Bitcoin. Now you work hard to DCA, you enter a different time. Some of you a few months ago, some of you maybe in the last cycle. And it takes time, right, to build up your position. And that is entire idea is that we will like more and more Bitcoin, right, until we are independent. The
Michael
beauty,
Michael Saylor hasn't stopped getting
yeah,
Bitcoin.
but
So
he started as a
yeah,
billionaire,
he's
and
not
most of us
finished.
are not billionaires,
Yeah,
and so
he's still
Bitcoin has this long-term trajectory. This is why you want to keep most of your Bitcoin in hodling. But nobody that says hodl is wrong. That is a way of thinking about Bitcoin. But
Well,
knowing this, right, is also consistent. If you believe that Bitcoin eventually goes up, then why not to take a little bit of risk? It's always a balance, right? Between I even take buying Bitcoin, the majority of the world think it's a crazy risk. You're a nuts, you're a crazy guy buying Bitcoin. It's not, right? You are right. It's one of the safest things that you can do. But what about going a step further and say, okay, I'm going to take a small percentage of that and take advantage of the other component of Bitcoin that even if it has this long-term trajectory, it has a lot of volatility. And you are harvesting that volatility and you
yeah,
transform it into Bitcoin. I don't
yeah,
care about, like in theory, you could use these to pay your bills or whatever, but I don't suggest that. I will not be interested in that. I'm interested in seeing my balance in Bitcoin
increase.
going up over time because that is the idea. You convert it into Bitcoin whatever gains you have. These
Well,
gains are
this,
on top of Bitcoin.
yeah, like for example, last cycle, I thought Bitcoin was too expensive, and I bought alts, and I lost money with alts. And when I really started Bitcoin, the reason why I became really just a Bitcoin buyer and a Bitcoin trader is because of what happened last cycle. And I started actually doing my research and learning about it. I started buying Bitcoin around 40K. So Giovanni's right. I'm not going to be able to stack my sats unless I have a tool that's going to help me do it. And that's one of the reasons why we developed this. A lot of people don't say, why doesn't Michael Saylor trade? Why does it? Well, you got to remember, Michael Saylor's buying Bitcoin with other people's money.
he is
If I
trading.
could buy,
He is trading.
yeah, well, yeah, but if I could stack Bitcoin with other people's money, I probably would just hodl as well. There's no point, right? Because I'm getting free money in order to buy it. So I think you got to use whatever tools you have in front of you in order to maximize your position. Um, yeah. Anyway, I think we've got another good question here from Jake. Marcus, maybe you can respond to this because I think it's a bit of a misunderstanding.
Yeah. Actually, it's the opposite of that. The algorithm is doing all of the trading. It makes the trading decisions, and you are the observer. You are the one who are the operator or user. The algorithm makes the trading decisions. It does 80% of the work, and you sit back and let it do its job, and you
Yeah.
you are in the overseer manager
So so
position. Yeah.
so when and let me maybe give a little elaboration on that. So the bot is doing everything, right?
Yeah.
If you're sleeping, I know now. See, in the past, I actually didn't like when there was too much of a retracement because I like to see Bitcoin going up, right? But then now I actually like it because this is when I
You
make
make
a
more
lot
money.
of money because
Yeah.
in the trace, like we are going to refuel. My algo is buying the dips,
Yeah.
and then when we recover, I see these 500, 600, $1,000, that get transformed into Bitcoin. So
Right.
that is a continuous process. When we say we require your participation, it's mostly because it's like a cost explained, it's a arm race. And so there'll be times where we want you to follow what we are doing, watch this show, participate in our Discord groups, and so on, because it's possible that we need to change a few things. We want to change the parameters, we want to change the approach, and that is actually part of what you're buying here. You're buying this team, all of us, thinking ahead all the time how to adapt to the market. So while the
Correct.
system is mostly independent, once in a while we want you to be there and say, hey, let's change a little bit the parameter because the market conditions have changed, or maybe our algorithm is improved, or things like that.
Right.
We want you to be aware of what is going on. In theory, yes, you could go and come back 2 years later and see what happened, but we rather have people that are involved and understand and they want to learn.
But it's
But
very simple. It's very simple, Giovanni. Why
yeah,
do people watch the weather on the news? You don't have
Exactly.
to,
Right.
but you
Yeah.
probably need to. So you need to tune into the show and the things that we're telling you, because we're just giving you the weather report. It's
Yeah.
just good practice to know what the weather is going to look like in the price action in the future.
Yeah,
That's
Yeah.
that's just
and
part
you
of
don't
our
have
work.
to do the choices by yourself. You have us, right? And we do it together. Of course, if you don't agree on certain things, in the end you have a last word, right, on what it needs to be done.
Yeah.
But like I say, my friend Dario, I want some bots are a little bit more aggressive, some bots less aggressive. You could say, listen, I'd rather make 1% a month, but I want almost 100%. Nothing is 100% possibility that I get liquidated. In theory, you could do that. You will make little gains. So this is why we need to talk with you, and we need to educate you and interact with you, because we want to tailor the algorithm to whatever your needs, your style. The thing we are not going to do, even when my friend Dario tells me, "Hey, can you push it to make it 20%, etc." We
Yeah.
are actually refusing to do that because we don't
Yeah.
want that. We don't want to take that responsibility of giving you this illusion that you are going to have these crazy gains and then you're going to lose money in the long term. We actually refusing that, and that actually is part of why I love to work with this team, because it has that kind of integrity, because otherwise it will be easy, like we show you, we do this crazy, we will get a lot of sales, and then we run away. I will never do that, right? That will be, I got hacked myself, I got rag pull. I experienced all kind of crazy stuff, and the last things I want to do will be to do this to others, So this is why I love this team, because sincerely, I really believe that we are giving you value, that hopefully this is valuable to you. That is my sincere estimation of what is going on here. You know,
Yeah.
uh, what do you think? What do you say, guys? You want to add?
Yeah, and I think the distinction between a bot and a system, I think essentially there's two things going on with what we do. The bot is what executes the trades, right? That's like you got a robot, and it's just pushing your buy and sell buttons, right? Now that's like how a grid bot works, how any kind of bot works. The Minotaur trading system is the brain that you put inside that trading bot machine. The brain is all that we're giving it, right? And that is dynamic and is changing. When we started working with Marcus, the brain changed. When we started working with Giovanni, that brain grew and changed. So it's constantly evolving, and that system is constantly adapting to the market. So sometimes slight adjustments, sometimes bigger adjustments. And this is why we work with a much smaller group of people. And also our price is much more expensive, because it's dynamic, and we cannot roll this out at scale. We're not just a trading bot company that executes trades on your behalf. There's a lot more that goes into it, right? That's why you can go get a bot, for $10 a month. But it's just not going to work forever. And the other thing is that you're not going to be able to trust it to deploy $1 million, $100,000 or more, because you don't fully understand what it's doing. Whereas when you work with us, we're fully transparent, and you understand the thinking that goes into everything. So then you can be comfortable and go, okay, I get it. I get why this works. I get why this is trading. I get what this is doing. Now I can increase my portfolio size because I understand it, and it's become predictable to me.
Yeah.
And I think that's what Minotaur offers that pretty much no one else in the market does. That's my sort of 2 cents on it.
Now, in terms of the technical details, basically it works like this: you choose an exchange. I like Bybit, but if you are
Coinbase
in United,
works.
Coinbase works. They do have
But
futures now, right? They start to
well,
trade the futures. Or
it's
soon.
spot. It's still spot. The futures has started to be rolled out, but they're not
They're not
trading
perpetuals
perpetual
yet. Yeah, they're
twenty
not
four
Yeah.
seven
perpetual.
yet. I think it's
Okay.
going to happen this administration. I think it's all going to happen.
They
Yeah.
have
Well,
expiration
We
date. Yeah.
yeah,
so
yeah.
we work with futures most of the time. You can work with spot. Best results are futures, but
But US clients, we have solutions for
yeah,
all US clients, but you just got to get on a call with us if you want to
yeah.
discuss them.
Right, exactly. And the entire idea is that we never touch your money, of course, right?
Never.
And
Yeah.
never, if you ever see any site that says, "Hey, deposit money here and we give you back,"
Yeah.
please,
Run.
please, please,
Run.
please, 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 okay, don't do that. It's through an API. So basically,
It's
you create a key. We help you with that. If you're not familiar, we do all that for you. They create a, we create a key. You create a key. If a key doesn't allow us to access the money, only trading, you just give a limited trading.
And you
Rights.
have to remember, sorry, let me interrupt you there. It's not even give us access, because they're signing up for the software and giving it access. It's got nothing to do with us.
To the software,
it's fully,
right?
It's
it never
fully
goes through
in their control. Never goes through us.
You get the license for the bot.
Which
the
is
bot
through
is running on your computer. We don't even know what the algo does. We don't have once we give you the license, it's your bot. Now you can call us. We can look at what the bot is doing. We can check that it's working, that everything is set up correctly. But it's all under your control, all of it. But probably it's not a good idea for you to go and change your parameters. Consult with us. Consult with us. It's good if you learn how to do that, but consult with us. You consult with us. We help you to set up everything. We can review the performance of the algorithm on a regular basis or whatever, and then it runs. It runs automatically. You can see the performance on your, on a dashboard. It shows exactly, when I post my P&L, you can see the P&L, the trades that it did, and also in your exchange, it shows you exactly all the things you did, and you're in control. If you don't like it, you can push a button and it stops. It doesn't do any trading anymore. So, but in general, give it enough time. You can also start to get good rewards. You need to, I will say, at least invest alpha Bitcoin, to get a good return on your investment over time. But if you want to test it like I did it like that, I put only a few $1,000s initially to make sure that it's doing everything it was doing. So that is another thing you can do. You can start with right, Costa. That is something they can do. They can test it with a few $1,000s if they want, right?
Yeah, of course. I always say to people that this is a 5 to 6 figure system or more. If you're playing the game the way that we play it, obviously the more capital you have, the more meaningful the returns.
Yeah.
Because you can make more. You can, making $10,000 safely will make more of a difference in your life than making $300 a month safely, right? So the more capital you have to deploy, the more the more value you're about to add to your life. Obviously, having less capital doesn't mean you should increase your risk. That's a dumb position to have, and that's what most people do. So our advice from the outset is that have a reasonable amount of money to begin with. I would say 30,000 to 20 to 30,000 if you want to just start testing is usually fine, but you want to be into that 50,000 pretty quickly in order to have a good positive impact on your monthly income. Anything below 10,000 is probably not right for you. The gains just aren't going to be. It's going to feel too slow. Now that's not a flaw in the system. Right, that's what you have to. That's what people have to understand. The system's not at fault because it makes money not fast enough, or it makes it too safely. That means the system's doing what it should be doing. So sometimes.
But if somebody is very, let's say, skeptical,
they can try it out with just a couple of grand. Even you can put. You can. This is another thing. It's a Swiss Army knife. You can do whatever you want. Right. You can do whatever you want. You can set up with $500 and let it run and extrapolate what that would do if you put $1 million, really.
Right, exactly. So listen, really, it's, nothing is 100% sure, but hopefully I got a reputation for being a very down to earth, analyst of it. It doesn't give you any FOMO. It doesn't give you any crazy prediction. And, maybe I repeated this story every time. It's like I am the grandfather repeating the story all the time. I tell the story where they contacted me and they were afraid that actually I will talk bad about their system because I have this reputation that I speak my mind. And, and it's equitable because if something is good, I'm going to praise it. If it is not, I'm going to sell it crap. And this system is not crap. So we were right, but
That was
hey, they took the risk. They took a risk, and I appreciate, to contact me, and this is, this is why I'm part of a team right now. And same thing with Marcus. Marcus was a client, from what I understand, right? You were a client on a certain point
about
before being part
2.5
of
years
the team.
ago. Yeah.
So
he was a
if you
client,
see clients joining the team, probably there is something
good. Something good.
there is
there,
something good,
Yeah.
We
Definitely.
can answer this question, and then maybe we can close here. And we will see you. Please come to see us in Vegas, okay? If you are in Vegas, come to see us. We would like to talk about the power law, the trading system. Come visit us. Anyway, next cycle, bubble will not exceed fair price, and in long run. Well, I don't know. This is what Saverio say. Saverio is my son. We have slightly different approaches, like he has his own approach. I think, I don't know. I think the bubbles will be there. The idea is that if they continue to decay, right now we have 80%. I don't remember by heart how big the deviation will be next cycle, but it's going to be smaller and smaller and smaller. So these big bubbles are going to disappear until basically we get in a regime where we do have deviation, and we never go to zero, right? You always have volatility, but maybe not anymore where we have these huge peak bubbles. That is good, because our bot actually loves that. He loves to have relatively small range where he can correct, go up, because if a long term is still, the power low, and you have deviation from it, that is almost ideal for the bot. Right? Correct, Marcos? Is that how it works?
That's how it works. It works with ranges and it works with extensions. So, yep.
Yeah.
It,
When we were sitting around the 85K, do you remember when we stayed there for quite a bit?
Yep.
Actually, the bot was
We were
was
printing
doing
money.
pretty well.
Yeah.
Yeah.
It was destroying that. It loves that kind of action because
Yeah.
it works just like the institutions algorithms work. It's doing the same thing that they're doing. It
Yeah.
mirrors their action. So that's the beauty
Yeah.
of it. You're playing the institution's game. That's what you want to do. Yep.
Correct. Anyway, guys, thank you so much to follow us and to spend your time with us. And we will see you in Vegas if you come in Vegas. Otherwise, probably we will not have a show. Maybe we can have a show live, right? We together. If we use our phone or something. I don't know if you guys are open for it, but
we could work something out.
Yeah. Maybe it will be cool. For sure, we will have some videos of us together or something like that. But it's always nice to be in person, to meet in person. But come to the event. Otherwise, if we don't have a show next week, it will be the week after that. All right, guys. Thank you so
For
much.
sure.
Bye, everybody.
See you
Awesome.
next week. All right.
Bye bye.